Okay. Good afternoon, everybody. Andy Petrasa here with Special Effects Academy on the start of the week session for the week that begins today, October 7th, 2018. As usual, we'll go over our agenda for the start of the week. And that will be the prior week's results, the currency strength meter for the week that just ended and the week prior, our fundamental announcements for the week. And I can already tell you this is a very light one, not much going on. Analysis of the major pairs, our setups in progress, and a few parting words. Let's start with the results. So the long-term ledger is what you're looking at right now. The trades at the bottom highlighted within red circle or square or whatever that is. A couple of those, actually 3 of them were not closed this week, but just luck of the draw, they fell inside the area. But in general, we had a pretty good week. We recovered from some of the less than stellar trades that had been closed a week prior. So we're up about 5% on the long-term account. We closed last week with a growth of 25%, and right now we're at 30, so about $1,000 in change were added to the account. We had quite a few good trades as we had the pound give up some of its strength from the weeks prior, and that played out very well against specifically the Canadian. The Canadian had a stellar week, and we were in 4 different Canadian trades, all of which added to our profit. Actually, one of them didn't, but it was a very minor loss on that one. So in general, most of the trades turned out quite well. One of them was especially good, and that was the pound Canadian. That one pretty much added the entire 5% for the week on the long term. The rest of them, between all of them, ended up pretty flat, but the bulk of the profit was on the pound Canadian. On the short term, we had a similarly good week. We closed with a growth of 7.31%. Total of 231.9 pips captured, and we do have 4 trades that were left open, and one of them, the first one, the Kiwi dollar, is carrying a really nice chunk of profit right now, about 150 pips last time I checked. The other ones are pretty flat, but they're all I guess we're moving in our direction on Friday. I decided to leave them open. Right now, there's, I think, one of them a few pips down. All the others are at profit. And, of course, the Kiwi dollar carrying the heavy lifting. So we're going to have a good start of the week on the short term just on account of the Kiwi dollar, which, as I said, has the bulk of the profit already protected via a trailing stop. So that is it for the short term. Well, wins, losses. So we had 6 wins, 2 losses there. And I'm sorry, that chart is obviously missing a few trades that were at the top. I was in a rush when I copy pasted it, and I can see that it comes from line 5 to line 11. So there are other trades that are not shown, and they were profitable ones. So regardless of that, we did close out 8 trades, 6 of them winners, 2 of them losers, for a 75% win ratio. And again, 4 trades are still open as we speak. Notes and opportunities for improvement. Well, as I said, we had a pretty great recovery week and then some. We exceeded quite a few of the parameters we had set for ourselves there. Not a whole lot more to be said other than highlighting that this is what happens when you have a system, you follow it through thick and thin. Not all of the weeks are going to be good. In fact, some of the weeks are pretty much guaranteed to be losers. But over time, a system, provided you're following a good system, is going to make you money. Now, additionally to that, the markets are starting to move. We were in a very sideways market for the last couple of months, I'm going to say. And these last 2 weeks have seen a few breakouts from prior channels, prior levels of support resistance. So it does look like the markets are poised to begin to move, and hopefully some of these moves are going to be new trends kicking off. you're going to find that most of the money we make, the big money, is following trends. When we don't have a trend to follow, when we're sideways, it gets a little bit challenging to make big profits. So here's hoping that this is the start of quite a few trends that we can latch onto. As I mentioned, 4 trades remain open. All of them are shorts: Kiwi dollar, Aussie JPY, Aussie CAD. As you can see, we're definitely negative on the Aussie. We're looking for Aussie weakness to continue into the market as we go forward. And the Kiwi is pretty much the Aussies' fair-haired stepchild there. They do move in tandem. And both of these currencies have been weakening since the beginning of the year. And we caught one of the swings where they actually got stronger momentarily. But that seems to be just, I guess, getting a running backwards to get a good running start to another move down. So we'll see how those play out. As I mentioned, the Kiwi dollar is already had quite a significant move, which we'll take a look at when we look at the actual charts. The relative strength meter for the week that just ended. So we have the 2 weeks, week that just ended, and the week that ended on September 28th. We can see that the volatility is extremely high. Again, indicative of our leaving that sideways consolidation pattern we were in. So we had a 5% the week prior, and we have almost 4% this week that just ended. Still very, very impressive volatility out of the market. Looking at the actual currencies and how they did against each other, we can see that the Aussie was a clear loser this week that just ended, as was the Kiwi. Both of those definitely had a rough week. And of course, we're trading them down. We're hoping that they have an even worse week this week that's opening. The Canadian gave up some ground against everybody except the Australian and the Kiwi. The Swiss was middle of the pack. Euro was middle of the pack. The pound had a good week. It gained ground against everybody except the metals. The JPY also gained quite a lot of ground. The dollar was middle of the pack as well. And the metals actually had a pretty good week. Both silver and gold appreciated against everybody else, which is also something normal. When you see this kind of volatility, this kind of uncertainty in the markets, money tends to start flowing into safe havens. And financially speaking, silver and gold are the hedges that people use to make sure their money doesn't go sideways when there is uncertainty in the markets. So the moral of the story is that we are in a period of increased volatility, and hopefully that will lead into sustained volatility in a single direction, otherwise known as a trend. Fundamental announcements for the week. As I hinted at in the beginning of this call, pretty light week. We have 3 high impact fundamentals scheduled. Gross domestic product out of Great Britain coming out on Wednesday at 4:30 a.m. Eastern Daylight Time. We have the European Central Bank monetary policy meeting accounts coming out on Thursday, 7:30 a.m., all times in Eastern Daylight Time. And that same day, the CPI, the Consumer Price Index, excluding food, out of the U.S. year over year, coming out at 8:30 a.m. Eastern Daylight Time. And with that, we're going to jump into the charts. So looking at the euro dollar, and this is going to be pretty standard for the week. We see that the dollar did appreciate quite significantly. We had a strong dollar, and the euro in this case weakened. So we had a significant drop in the euro dollar, except for the last couple of days there. Actually, the last day was really where the movement happened. So we did have a reversal on the last day of the week, and the euro dollar ended significantly lower than it had been a week prior, and indeed has broken through the support level of the Ichimoku cloud, that shaded area you see right above the price. So it's looking like dollar strength across the board, which I will cover later when we look at the setups in progress. But right now we are seeing significant dollar strength in the market. The pound dollar, same thing. We had the pound weaken against the dollar quite heavily for most of the week, getting a bit of a recovery the last 2 days of the week. USD/JPY, same thing. You'll see the same pattern repeated on pretty much all the dollar charts. And this is one of those pairs that gave us quite a nice chunk of profit over the week, trading the USD/JPY higher. It did, as did the other pairs, it did do a bit of a retrace the last couple of days, Thursday, Friday, and ended up still significantly higher than where it had started out the week. USD CAD, this was our clear winner, especially at the beginning of the week. We had a massive drop into Canadian strength, making for a gap on the open a week ago today on pretty much every single Canadian pair, including some trades that we had open in that direction on the Canadian. So that gave us a nice little boost to the beginning of the week, and certainly at least one of them, the pound CAD, gave us the bulk of the profit we took in at least one of the accounts. This did not last, however, for the entire week. So beginning on Tuesday, we see that the USD CAD did start heading back up. Dollar strength overrode the Canadian strength, and this one actually moved beyond where it had opened the week. So in essence, it did lose ground over the week after that pretty significant drop. Of course, we do protect our profit anytime we have it, so we took the bulk of that and did not give up much when the retrace happened. USD Swiss, the Swiss has gone into a complete meltdown, so the Swiss is now against the dollar heading back up towards the parity level, the 1=1. I do have a pending order that if it does hit parity, I will immediately sell, which may seem a little bit counterintuitive. Why are you selling when it's going up? The reason is that that parity level is a very, very strong area of resistance. The USD Swiss rarely trades higher than 1, and when it does, it doesn't last for a long period of time. It will have a very wide stop, 200 pips worth of stop if and when we get that trade triggered, simply because that is the high. I want to clear the highest high it's ever done in recent years, and that is at the 1.2 level. So if we do get it rising, it should not rise back all the way up there, and eventually we're going to see it drop again, hopefully to around the mid-90s, which is going to be a really, really good profit target. And again, we're looking for some of these trends to start picking up and establishing themselves. And this is one that I have really high hopes for. Over the years, the USD Swiss has actually bought me several rental properties, so I'm always grateful to the Swiss. Aussie dollar, I covered this early on when I mentioned why we have all those Aussie trades open where we're shorting them. You can see that drop since the beginning of the year, and it did indeed make a new low this week that just ended, and hopefully we'll go on to even higher lows, or lower lows, I should say. We are going to go into lower lows as it keeps dropping. There doesn't seem to be anything that will stop the meltdown that the Aussie has been happening. Now, the Australian economy is not in a bad position, just their currency hasn't seemed to be able to catch a break. That said, always be careful. Eventually, this one is going to go all the way back to the top of the range, but it doesn't seem to be in any hurry to do so. When it does, of course, we'll trade it in that direction. Kiwi dollar, same thing. Pretty much a carbon copy of the Aussie dollar chart, and also made a new low. And you can see on the screen the arrow 3 candles back where we shorted this pair, and that is the winning trade that we have open right now, as this continues to make those lower lows. So we caught the bulk of that move in the last 3 days of the trading week, and I'll just continue leaving that trade open for as long as it's producing profit for us. Aussie Canadian, same thing. We took some profit here as well. But in the case of the Aussie CAD, we did have the CAD give up a little bit of its move the final couple of days of the week. Still, we see the gap when the week opened 7 days ago. And we also see that unlike the USD CAD, this one did not have the strength to make it back up towards the price at which it opened for the week. So this one is significantly more bearish than the USD CAD and is also an open trade that we have right now. After taking quite a nice chunk of profit off the week, we re-entered the trade after the brief retrace in the same direction. We are still shorting the Aussie Canadian. Euro Swiss, nothing much to see here other than what we already know. The Swiss has been weakening. In this chart, it is at resistance, so it's right in the middle of the Ichimoku cloud. And I do expect some Swiss strength to return eventually to the market. There's no fundamental reason why it shouldn't, other than it appears that a bunch of money got taken out by Russia in the last week or so on fears that U.S. sanctions would potentially freeze that money in Swiss bank accounts, not allowing their owners to withdraw it or use it in any way. So they preempted the sanctions. They took all the money out before they came into effect, if they will come into effect. And that did hit the currency when it was actually strengthening and made it go into a reversal. So right now, this is still a bullish chart in the intermediate based on what we're seeing, but I don't think that's going to last too much. I don't think it's going to go back up even past the middle of this chart. So I'll be looking for a good opportunity to short it is, I guess, what I'm trying to say, but not until I see that good opportunity. Euro pound, and this is, boy, it's very surprising to me how much the pound has strengthened on absolutely nothing at all, especially against the euro. So the market is pretty much saying that in a fight between Europe and the UK, otherwise known as Brexit, they see the pound as the winner, and they're putting their money where their mouths are, I guess. So another one that I don't think will last, I think this one at some point will rush back to the top. I also have a pending order on this pair to make me a buyer when it rises by a certain amount, but I'm not going to chase this market. I'll let the market come to me. So that will remain a pending order until I decide it shouldn't be, and we'll see how far this thing drops. Short term, I may indeed start shorting this pair if I see good entries. Well, I always had that plan. I've never said I won't go long or I won't go short on anything, but I just haven't been able to catch it at the right point in time. We'll see what happens in coming weeks. Euro JPY. In this case, I am trying to see if we can latch on to the JPY as it drops back into the channel. Hasn't happened yet. We've had JPY strength. Of course, you can see that in the last couple of weeks worth of candles after a less than stellar movement in the opposite direction. So right now, I'm really not seeing a good opportunity. Both the euro and the JPY have been weakening or taking turns weakening, and I don't like to play weak against weak. So I'll probably let this one continue to play out, but I am on the lookout for a good short opportunity. Euro Canadian. What can we say about the Euro Canadian? The Canadian got stronger on this pair, and we also took a nice chunk of pips out of it. We were in several Canadian trades this week that just ended. This one also did a retrace towards the end of the week. Actually, throughout most of the week, it retraced. The big drop was Sunday into Monday. After that, it pretty much started going back up. But it did so with a lot less strength than the plummeting that it had earlier in the week. So even though it did a retrace, and that retrace was about 4 days, the majority of the week, it barely got within the general neighborhood of where it had started out the week, and probably is going to be a good short opportunity to trade it back down towards the bottom if we see Canadian strength still present in the market, which we should, but I'll cover that when we get to the setups in progress. Pound JPY, this is another inexplicable one to me, how the pound has been gaining ground on pretty much everybody except the dollar. So we've got this one trading at a prior level of resistance, as you can see in the chart. This is another one that I'm very eager to short when I see a good opportunity. For now, it's not happening. Aussie JPY, and we are short on this one. This is one of our open trades on the short-term account. Actually, all open trades are on the short-term account. We're all cash right now on the long-term. But this one had a nice drop. We caught quite a bit of that drop as well, and it looks like it may be indeed dropping even further. So we're already short on it. I'm looking for it to go towards the bottom of the chart, which is a nice chunk of pips. And this is all still based on Aussie weakness more than anything else. And we can see that it has left the sideways channel. It's making a breakout towards the bottom. It's crossed a prior trend line. It's bearish across the board. Ichimoku cloud is now resistance. Yada, yada, yada. Williams is dropping. But there's nothing positive about this pair. That doesn't mean it can't go backwards on us, but it is looks like a good trade at this point. Euro New Zealand, and this was probably the surprise of the week after the Canadian. We saw that the Euro New Zealand had been dropping for the last, pretty much last month, and then something spooked the Kiwi, and we had a massive drop in Kiwi strength, or well, Kiwi weakness, and rose in this case, and that affected this pair as it affected the Kiwi dollar and all the other Kiwi pairs. We took a good chunk of money out of the Kiwi dollar. Actually, we're still doing that. We're still in that trade. This one we did not take, but pretty much did the same thing. So we see that Kiwi weakness. In this case, it made a higher high, which is significant in and of itself. And another one that we'll see if there's any opportunities to trade it back towards the bottom of its prior range, towards the support level indicated by the Ichimoku cloud, or if indeed it's going to go higher, in which case we will become buyers. But it is too soon to tell, but definitely an interesting pair to keep an eye on. Pound Canadian, again, massive Canadian drop the first day of the week, and then absolutely the opposite happened. This is one of the deeper retracements that the Canadian did. We did take 3 separate trades on this pair, 2 of which were really nice winners. And the bulk of the profit from last week, as I mentioned on the long-term account, did come from this one trade. Right now, it is heading in the opposite direction. And another one that I would be looking for the opportunity to short it all the way back down to the support at the bottom of the chart, which is about 300 pips. And I do want those 300 pips. So we'll see if we get a good opportunity. I'm not going to be trading the short-term account this week, by the way. Callum is going to be doing that, but I'm giving him all the ammunition he needs to make informed decisions here. And this is probably one of the better pairs to be keeping an eye open for opportunities during the week. And that is the last pair we're going to be looking at. Our setups in progress for the week. US dollar, we saw a good week of US strength. That was pretty clear from the relative strength meter, as well as the charts we just looked at. There's nothing in the works, nothing in the news cycle, nothing planned as announcements come that seems likely to weaken the dollar. So I would expect this week to be good for the dollar. That said, be cautious always when trading the dollar pairs, because any unexpected news will have the capability of moving this one sharply. Euro pairs, the euro has been very indecisive and indeed may start entering a period of sustained weakness due to a lot of factors, not just Brexit. There is problems in the European banking industry. There's under financials. There's grumbling from some of the member states that may indeed cause the breakup of the European Union. Not immediately. That won't happen for 10, 20 years. But you can already see the writing on the wall. The Brits leaving, Brexit, of course, was one of the nails in the coffin there. But you also see grumblings coming out of Switzerland. You see very, very right-wing parties actually winning elections in Austria, in Italy, and quite a lot of the smaller, the non-German, non-French components of the EU. It looks like they're going into a little bit of a, how should I phrase this? I think they're backpedaling on the whole European Union idea, and you begin to see all the smaller countries get fed up first because they're the ones being hardest hit whenever the Europeans adjust their economy. Germany and France, of course, the big guys in that union, they rarely get hit with austerity measures or anything because they are booming economies. However, Greece, Italy, Spain, all of these are they're not happy. Anytime there's a financial issues, they get the crap end of the stick. And there's a lot of grumbling, which so far have been kept quiet simply because the people in power were very committed to the European idea. Well, the people winning elections these days are pretty much like Trump. They're not committed to any idea. They're committed to doing whatever they feel is best. And if they need to break prior alliances, cancel treaties, get out of unions, they don't care. They'll go ahead and do it. And that is the concern, that sort of atmosphere is becoming the norm in Europe. So that's probably not going to help us week to week in trading, but I do see that the euro is going to have a rough patch ahead that may last for years. And of course, any rough patch means a trend, and if we can latch onto trends, we're going to be all the more profitable. The pound pairs, the pound had yet another good week for reasons totally unknown to anybody with common sense, but that is what has been happening. The pound is regaining strength against everybody except the dollar. I think that long-term weakness is still a given based on Brexit, based on UK politics, but the news has been very kind lately to the pound. And or at least has not been terribly unkind. I would be very, very careful trading into pound strength. I don't think it's going to last a long time. We'll get back to pound weakness eventually, sooner rather than later. But of course, trade what's out there. Don't trade long-term approaches. You got to trade what the charts are doing today. But keep that in your back pocket. Be ready for a pound weakness period that will probably last into next year. Swiss pairs, we see yet another week of Swiss weakness, and I explained why it happened before, or what I think happened, and it may go all the way back to its extreme, especially against the dollar, back to that 1=1, that parity level, before turning around again. I don't see any long-term weakness affecting Switzerland itself, so I think this is just bouncing between those two extremes. But the bounce towards the bottom, it was dropping quite nicely, did get interrupted by this news, and it may never get to the bottom in this cycle. It may go all the way to the top first and then begin dropping, or at least that's what I think it's probably going to do, and why I have my pending sell order at the top at 1 Swiss franc to $1. Last but not least, the cat pairs. Of course, we did see the NAFTA treaty, the North American Free Trade Agreement, was signed again by the U.S., Mexico, and Canada on the weekend, which caused most of the CAD strength that we had Sunday into Monday and that treated us so kindly. I did do a retrace towards the end of the week on pretty much every cat pair, but it was the best week it's had in quite a while. There is no reason for Canadian weakness at this point. So if anything, it may hang out, but more likely it's going to start dropping again on all these cat pairs. So cat strength is what I'm expecting, and we'll see exactly what happens. But we have the treaty signed. We have oil prices rising. Looks like good news for the cat at this point. So that is my view of the week. As I hinted at or directly mentioned in some of the prior slides, I do see great times approaching. I've always said that trading is probably the most boring endeavor ever, except when it's not, which is most of the time. So it is paradoxical, but what we do is we wait around for hours, for days, for weeks, sometimes for months, waiting for something to happen. And then when it happens, it's like heart attack after heart attack, and you gotta be, it's like riding one of those mechanical bulls in a bar. You gotta hang on for dear life. And then you get to be bored again for some period of time until the next one hits. So it's both boring and exciting at the same time. I happen to like it. I thrive in that environment. But the lesson here is you got to always be ready. Especially when the market is quiet, you know that's not going to last. So that is not the time to ignore the market or to slacken. Keep doing whatever you do. Have a routine. You're looking at the charts every day, every week, whatever your routine is, stick to it, no matter what the market is doing. So you're always ready. And of course, now would be a really good time to get ready, which is what we try to do with Special Effects Academy, with our courses, our different services, is so that we and you are always ready. And that is going to be the end of it for me today. As a parting note, I will be taking a few days off, the bulk of this week. So Callum is going to be carrying the torch. And with that, even before the Q&A, Callum, I turn this over officially to you. You're it.
Thank you very much.
That means keep talking. I'm done.
Okay, right. I thought you was going to do the Q&A, see if anyone had any questions, and then I'll...
No, you do say whatever you want to say, and then we'll wrap up with Q&A.
Right, all I was going to say is I will be trading a different system, because I will be trading my own system rather than trying to trade someone else's. It's not too complicated, and I was going to open up probably the afternoon session, just to go through the rules if anyone wants to get involved with that. So just let me know if that's something you'd be interested in doing. Other than that, I am going to open up the session for the UK Open. So I'll probably open like 10 minutes before 8 o'clock UK time, if anyone's interested in that one as well. Other than that, has anyone got any questions?
Yeah, Callum, do you share Andy's belief that the pound is headed for weakness, and if so, why?
It's a good question. I don't tend to pay that much attention to the news, to be honest. I literally follow the trend. If a trend is going up, I'm buying. If a trend's going down, I'm selling it. I'm not as particularly worried where the news is coming from. I tend to get into the trades a bit later, let the news do what it's doing, and just follow the trade. So as to regards where the pound's going, I don't know. I really don't. But if it's trending and it's going up or down, I'll buy or sell it. I have no thoughts as to where it's going and why.
Okay.
For me personally, too many times I've thought this is where it should be going for this reason, and the market's just done its own thing. So I just find it's easier for me personally if I just follow what's going on the charts. I am a very, very much a technical trader.
Okay. All right. Well, thank you, sir.
My pleasure. Anything else?
Not for me, anyway.
Miguel, anything from you, sir? I'll take that as a no then.
Think we put Miguel to sleep?
No. I'm still here. I was talking the whole time. You guys hear me?
Yep.
You do now, yes?
Okay. I actually do have a question, Callum. You mentioned that you were going to share your setups before the London session. Did I get that right?
Yep.
Okay. So I guess maybe you can shoot an email for that scheduling as well, because I'm interested in what your setups would be. Because you mentioned that you're more of a technical trader, so I am
Yeah.
interested in what your strategy would be compared to Andy's.
Okay, cool. Well, in that case, then I shall probably open up the room at 7:30 UK time. That will give us plenty of time, so I can go through the rules quickly with you and then show you what I'm looking for.
7:30, so that would be 10 PST, I think.
That's not too bad then.
Yeah, I'm active in the London hours anyway.
Oh, that's cool.
Let's see.
I will get an email sent out with a link and whatever. So
Cool. I will see you then. I'm really interested in what you got set up for.
cool. I look forward to it.
Sweet. All right.
Right then. In that case, Andres, do you have anything you want to add?
Nope. Have fun. Kill the market. And talk to you guys later.
Kill the
Thank you very
market.
much.
All right.
But Wendy, enjoy your time off.
Thanks, my friend. I will. Have fun, guys.
Later.
Bye, mate. Ta-da.